Welcome back. I'm Pratap here. Today is 9th December 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. Click on the tab, you get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new video or any other very important updates, we will be providing at our Telegram channel. Okay, now let's get into the analysis discussion. The last report, we identified 7 high liquidity zones from daily and 75 minutes time frames. Out of these 7, we got 4 trades from 2 stocks. The first one is Aurobindo Pharma. This is a 75 minutes high liquidity zone. Our software identified this zone as a rally, 3 base candles and a rally candle with hidden body. ERC candle. Okay, and in this zone we fine-tuned with 15 minutes time frame. I already explained how I fine-tuned this particular order flow in the previous videos. So I am not focusing on this. But today in the live market, a dynamic zone is created. You know what is dynamic zone? The zones created during the live market. So morning, this is the 9:15, 15 minutes candle. This is the leg in. And then you have a base candle, and then you have a rally candle. It's like a dynamic view, rally, base, rally. The 15 minute zone. This 15 minute zone is fine-tuned with 5 minutes time frame. So in the 5 minutes time frame, you have either you can consider drop 2 base candles, or if you want to consider this as a failed ERC leg-in candle, you have 1 base candle rally. Either way, it is okay. This is the order flow where you need to focus your trades. See, prices went and came down. We got the first trade here. When morning 10 o'clock 5 minutes candle we got, and after that it reached the 15 minutes target. Where is the 15 minutes target? Here you have a rally, 2 base candles, medium size candle is also part of the base, and then you have a very big drop candle. This 15, and earlier see prices, they came very near to the zone and came down, again came near to the zone and came down. Today also now this time entered inside the zone and came down. So reached that 15 minutes target. How much profit it has given? Aurobindo Pharma first trade has given 6,820 rupees profit, which is 5.5% ROI as per one futures margin cost. After that what happened? Again at 11 o'clock, prices once again they entered into the fine-tuned area, gave you the second trade. But it failed to reach the 15 minutes target. Prices were moving after you took the trade. It failed to reach. But is it achieved 1:3 RR? Yes. Until here, it has reached, until the top, it reached around 1:4.5 RR it achieved already. So 1:3 RR achieved means it is a successful trade, but the problem is it's failed. So that's why generally what is the rule you apply? After reaching 1:3 RR, we will start implementing trailing stop. So that is what, go to the 1 minute time frame. After you took the trade, second trade here, the prices were moving. After achieving 1:3 RR, this failed ERC candle. Maybe you can consider this as a rally. Prices after some time, dynamic view prices are moving. Rally, base, rally. But this one is not violated. After that again, rally, base, rally is created. And then this zone is violated here at 12 o'clock 40 minutes. When you got the trade at 11 o'clock 12 minutes and 11 o'clock 12 o'clock 40 minutes, nearly after 1.5 hours, this 1 minute zone is violated, and here you will exit the trade, and that way it gave you the profit 3,382 rupees, which is a 2.7% ROI as per one futures margin cost. Of course, third time also prices came. This is almost closing hours of the market, last 1 hour. If you would have taken a trade here, definitely your trade would have been stopped out here. Third trade, in case if you have taken. But this is last 1 hour, you should not forget it. Many people will avoid, but if anybody, some people took trades even at 3 o'clock also. So any such kind of, any of our members would have taken, this would have been stopped out. Okay, but we got 2 successful trades. This is Aurobindo Pharma. The next one is UPL. UPL also gave 2 trades. This is also a 75 minutes high liquidity demand zone. See, we have a rally candle. We have 1, 2, 3, 4, 5 base candles, and then a rally candle. This is how our software identified this zone. And within the zone, we fine-tuned with 15 minutes time frame. Here we have a 15 minute zone here. We have drop, 2 base candles and a rally candle. And this 15 minute zone again fine-tuned with 5 minutes time frame. You have a drop, you have 4 base candles and a rally and follow through candles. This is the 5 minute zone. What about the target? Target is the 15 minute zone. This was the target. You have a rally, you have 1, 2, 3, 4 base candles and a drop candle. Sorry, this is the rally, 1, 2, 3, 4, 5 base candles and a drop and follow through candles. But what happened? After you took the trade, one more 15 minute zone is created. Drop, base, drop. But by the time already you took the trade, you may ask a question. But by this time, at the time of taking trade, why we didn't consider this as a leg out? Because this candle is not completed. Many times what happens? Prices reach and sharply they move up. And this candle will result as a failed ERC candle. Mostly it may not be qualified as a leg out candle. At the time prices easily reach this target. But that does not happen. Finally, you took the trade here in the type 2 proximal. But prices came inside and closed. Is it violated? No, it is not violated. Almost reached 5 minutes before the distal line, again it moved up. But while moving up, again a 5 minute zone is created. Go to the 5 minutes time frame. Here you have a drop, 2 base candles and a rally candle. Again another 5 minute zone is created. That means another trade opportunity will get in this area, the fine-tuned area. Okay, but anyway, the revised 15 minute zone it created. Because a drop base drop, this is a dynamically created this zone during live market. That's why immediately we have to revise our target from this 15 minute zone to this newly created drop base drop. But already you took the trade. Otherwise, you might have taken a deep inside your entry, because from this proximal line you won't be getting 1:2 or 1:3 RR you won't get. To get 1:3 RR, you need to take some deep, a little deep inside, you need to take the entry. But at the time, our focus is on this target. From here to this, we have 1:3 RR is there. You have around 1:4.5 RR is there up to here. But till this revised, you have 1:3 RR is a little short. But already we took the trade. There is no other option for you. You have to exit here. Okay, now again prices are coming here. Now second trade you will get, but you won't take your second trade in this type 2 proximal. You want to take a little Inside you have to take until you get 1:3 RR. See, now I adjusted the entry here. If I take entry here within this area, then I will get 1:3 RR until this 15 minutes target. That's why second trade is taken a little inside the zone. Generally, when you take trade little inside, there are higher chances you may miss the trade. That possibility is there. But there is no other option. Without RR, you can't take the trade. Even if you miss the trade, okay. But luckily, what happened today? The prices entered a little inside than what the entry we defined. That means our trade is triggered here, executed, and then reached the target. This is the way you got two successful trades. And third time again it came during the last 15 minutes candle of the market. Last 15 minutes. Mostly we won't take trade. But see, third time also again how it pushed the prices. Sharply it moved the prices. Of course, because this is the last candle, there is no time for us to reach this target. Maybe some more time is there, it might have reached this target again. That means in this area, the order flow is very strong. The order flow is very strong because institutions in this 15 minutes area, they created one more drop base rally they created. Maybe a lot of order flow might have added today. But anyway, we got two successful trades. First trade and second trade, we took a little inside to get 1:3 RR. But your target still remains same. So what is the profit we got? The first trade we got 5,149 rupees. Second trade another 400 rupees extra profit we got because we took the trade a little inside so that we achieve 1:3 RR. So second trade gave you 5,555 rupees profit. And the first trade gave you 3.6% ROI as per one future margin cost. Second trade gave you 3.9% ROI based on one futures margin cost. So these are the high liquidity zones. We got successful trades. And remaining zones, we didn't get any trade. But let me explain how we fine-tuned. First one is HDFC Life. This is a daily high liquidity demand zone. A rally, base rally. I think previously, I don't know how I explained this. I think previously I explained this, how I fine-tuned. Maybe one of these candles you might have got. I think HDFC Life I already explained to you. Maybe you please refer 4th December HLQ analysis video. In that video I might have explained. So I am skipping this. And Divi's Lab, this is a daily high liquidity supply zone, drop base drop. This one is fine tuned with 75 minutes time frame. Again you see failed ERC candle leg in, two base candles, drop with hidden body. And next again 15 minutes time frame I fine tuned. Within this again this is the leg candle. You have 1, 2, 3, 4 base candles and then again a drop with hidden body. This is the area again fine tuned with 5 minutes time frame. In the 5 minutes time frame you have a rally candle and 3 base candles. These 3 base candles and then again with hidden body drop. So you have a very big pro gap within this area. That is the reason why prices are not easily entering inside. We didn't get any trade opportunity today because the candle is there outside only. Once again it pushed the prices. Rally, base, drop today it created. Next one is IEX. This is also daily high liquidity supply zone. You have drop, 2 base candles and again a drop candle. This one is fine tuned with 75 minutes time frame. You have drop, 3 base candles and drop and follow through candles. This 75 minute zone again fine tuned with 15 minutes time frame. In the 15 minutes time frame, we have a fine tuned 15 minute zone. You have a drop, you have two base candles, medium size leg candle is also part of the base, and then drop candle, drop base drop, and this one again fine tuned with 5 minutes time frame. Very nice. We have a rally, two base candles, and a drop candle, follow through candle. So this is the fine tuned 5 minute zone. We planned our trade, but today prices did not enter into this zone. Price just touched the high liquidity, but they didn't go to the fine tuned area. Okay. And next one is M&M Finance, Mahindra and Mahindra Finance. This is also a daily high liquidity supply zone, rally base drop identified by our software. This one fine tuned with 75 minutes time frame. Here in the recent price action, rally base drop, follow through candles. A 15 minute zone is created here, and also beginning of the zone also there is a 75 minute zone. Here also you have a rally base drop. Rally means still higher wick of the base candle, you have to draw the zone. So this is the 75. This 75 again fine tuned with 15 minutes time frame. So in the 15 minutes time frame here, you have an excellent 15 minute zone, rally base, two base candles, medium size candle, part of the base, and then drop, follow through candles. This is the 15 minutes. And in the recent price action also we have a two fine tuned 15 minute zones. One is at the proximal line, and another one is at the distal line. Proximal line is inside the zone. Inside zone means within the zone, but distal line is well before the zone creation, order flow is created. First this drop base drop is created. After that this entire 75 minute zone is created by picking the orders from this 15 minute zone. What is this concept? Lesson 22. Lower time frame zone as an horizon to the higher time frame zone. That means this drop base drop order flow is very strong. But we should have a fine tuned 5 minute zone, otherwise this will be violated. And this is at the proximal line. We have a rally base drop. Or you can also consider drop, two base candles, and drop. Either way is okay. Drop base drop. This is overlapped at the proximal line. So again we need to fine tune with 5 minutes time frame. See here the fine tuned zones, we have drop, one base candle, and again a drop. If you feel the risk is high, type 3 proximal also you can plan, so that the price is almost near to the 75 minute zone overlapped area. If you feel risk is high. If you feel you will miss the entry and risk is okay, you can plan drop, type 2 proximal drop base drop, you can plan the trade. It's up to you. But what about here? This is the horizon, right? The horizon is having the 5 minute zone also. We have a rally base drop. Again it picked up the orders and again came down. From here it picked up the orders and the entire 75 minutes fine tuned area is created. So we have one first 5 minutes order flow, second 5 minutes order flow, but this is the horizon for this entire fine tuned 75 minute zone. And then we have one more order flow. This is at the zone, top of the zone we have an order flow, drop base drop inside this 15 minute zone. This is inside 75. This 75 is inside the daily. Drop base drop. This is the way we have identified 3 order flows inside this zone, but none of these order flows are executed today because price moved here only. They didn't go inside. And Aurobindo Pharma already we discussed, and the next one is Bata India. Bata India 75 minutes high liquidity demand zone. This is a rally, 3 base candles and a rally. But have you noticed we didn't fine tune this zone because the 15 minute structure is very bad. Look into the 15 minute structure. drop all these base candles, so many, we have 8 or 9, 1, 2, 3, 4, 5, 6, 7, 8, 9 base candles and a rally candle. The structure is not good. Maybe next time easily this zone will be violated. So that is the reason why, even anyway, prices didn't enter into the zone today. If you look into the 75-minute zone, the candles are outside the zone. And UPL we already discussed. So this is the high liquidity zones analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.